Well, a 12th interest rate rise this week, but a lot of the talk in property has been about prices going up in some capital cities. Joining me is senior economist with Proptrack, Paul Ryan. It's quite extraordinary, Paul, the property market still holding on strong.
Good morning. Yes, you might see that the people buying houses haven't looked at interest rates. We saw in May, property prices nationally went up for the fifth month in a row. Now increased 1.5% this year, and now only 2.5% below that post-pandemic peak we saw.
How is this long weekend shaping up for the property market?
So we've got a fewer sales planned or scheduled this weekend, about 1,100 auctions. Now, it's not unusual in the long weekend to have fewer sales. I think sellers tend to push either sales forward or back around the holidays. But really, the big broader story here is that the market activity has recovered with prices this year. Earlier in the year, we were seeing around 20% fewer sales than we saw in 2022. But in May, we saw a similar number of sales as last year. So the market really, all of the indicators, we look at sales, we look at prices, auction clearance rates above 70% at really high levels, are pointing to a real resurgence in the property market.
What do these results mean for the market over the coming months?
I think it means traditionally we see over the winter months less activity. I think what it means is that a lot of sellers that maybe would have sold earlier in the year are thinking now's a good time to sell. I think hopefully these really positive indicators bring more properties to sale, because at the moment the situation is we've got a huge amount of demand and not enough supply to fulfill that. And that's a big reason why prices are increasing despite those big decreases in borrowing capacity and big increases in interest rates over the past months.
Yeah, we'll just extrapolate on that a little bit for those that don't quite understand. It sort of makes sense that after 12 interest rate rises, the property market should be copping a hit, but it's not driving these prices down at all, as you've said. And so can you give us, in your sort of expert language, why this is happening?
So normally we see property prices tightly following how much people can borrow. And we've seen with interest rates going up 12 times, people can borrow about a third less than they could a year or so ago. Normally that would have a big impact on what people can bid when they go out to auctions this weekend. But the demand and supply conditions are such that there's so few properties relative to kind of how many people are still out there wanting homes, that is overwhelming that big decrease in borrowing capacity. So what we're seeing is that housing demand, and part of that is that we've built fewer houses throughout the pandemic, and part of it is that the households have reorganized since the pandemic, so people want more space. So that means we need more homes to house the same number of people. That's kind of combining to mean that fundamental housing demand remains really strong and is likely to be really strong going forward.
Paul, what about the rental market?
That's the place where we see the imbalance between demand and supply at its tightest. You see that it's really difficult to find a rental property all across the country. We're seeing rental vacancy rates below 2% pretty much everywhere. And rents, because of that, are growing really, really quickly. We're seeing advertised rents growing in the order of 10% a year. That is putting a huge amount of pressure on renters. We've got general inflation running at really high levels, so the cost of everything is going up. And then people's biggest expense, which is housing, is rising really quickly as well. So 2023 is shaping to be a really tough period for people, both mortgage holders and renters alike. The solution here is building more homes. So hopefully we can get to that soon.
Finally, the property market's a hard one to predict long term, but there are people saying that we could see a real boom in prices next year.
Yeah, with those demand and supply conditions, that's putting upward pressure on prices. If we see interest rate decreases next year, as many are expecting, that would add, more demand to prices. So that could be the case next year. I think at some point we have to recognize that, borrowing capacity is down quite significantly. We're likely to probably see prices keep increasing over the coming months at this kind of slow rate that we've seen over the past 4 or 5 months.